Crump is. You guys were like, what's going on tonight? Tonight is going to be a great night, and you're going to be learning a lot. And I'm sure your business is not going to remain the same if you take the information that's going to be, brought to us tonight. We have an awesome, awesome, awesome gentleman in our midst. I've worked with this gentleman personally, and he's always there to help me, to always lead me through the way. I have none other than my brother, our Crump Internal Wholesaler, Mr. Brian Schanick. Please take the floor. Let's give it up for Mr. Brian. He's going to be walking us through. So get ready, be pumped up, take your notes, get everything ready, and we get it into it. Brian, I yield the floor to you, my brother. Take it over.
Thank you, thank you, thank you. And I appreciate it. I will give you props. That is by far the best introduction I've ever had. And I've been doing these presentations for a number of years, so I really appreciate that. For everybody on the call who I'm not familiar with or have not met yet, my name's Brian Sahanic. I do have some good news that I will get into. As previously the internal wholesaler here at Crump, we have some new changes that I'm excited to share with the team. Just on the topic of Vegas, by the way, I just booked my rooms recently too, and those are a deal. So yeah, I would get on that for anybody who hasn't yet, because we're going to be there as well. We're going to have a large team that we're going to be rolling out, but
Recording in progress.
I don't want to take any more time. I want to get right into it tonight. Just to give you a quick background on myself, again, my name is Brian Sahanic. I am actually, as of this week, one of the new wholesalers here for the East Coast on the life sales team with Crump. So we've had some movement. Seth Bachman, who a lot of you were familiar with, he accepted another position. He had a good opportunity. So I am stepping in here to cover your region, and I'm actually going to be introducing some new faces here in the near future, not tonight. But that's why it's important to come see us at Vegas. We're going to have an entirely new team with us here. So to get into the nuts and bolts of tonight, or the meat and potatoes, as Adamola had mentioned, I want to give you an overview of what Crump is and how we can support your business. And truthfully, I'm going to throw a lot of information at you tonight. I don't need you to try and remember everything I say, but I want you to see the broad platform that we have access to help support your business and help find the right financial solutions to help support your clients. So I will get right into it tonight. We are all financial professionals here. I'm not worried about that. But the big announcement I have is the new look sales team here with Crump. So with Seth Bachman and one of our West Coast representatives stepping away, they had accepted other positions. I am now going to be partnered with Jay Wilkerson as the East Coast wholesaling team here for life insurance. For everybody on the call here. So I myself, I've been with Crump now for about 13 years, exclusively working on the life sales team. Jay has a history working with Crump. He actually worked on our sales support team with World Financial Group for a while before he moved into a leadership position. He has experience managing his own book of business with New York Life, so he brings a lot to the table. He brings a fresh set of eyes. His first day was just this week, so we're still getting him up and running, but you will see Jay's face a lot moving forward. I want to get him out here in front of the team because I'm extremely excited to be partnering with him here to help you moving forward. We do still have Brian Metzger, our sales director, who you probably have all seen over the years. He's been going to Vegas longer than I've been in the industry. And then Janica Petty on the West Coast. Our new leader, Hangame Seji, she's going to be at the booth with us out in Vegas. For anyone who's going to Sacramento, we'll be there as well. So please come say hi. We're going to have a large team. Obviously, I want you to meet Jay. I want you to meet Hangame, but you're going to see a different kind of support coming from the Crump sales team here moving forward. So for anybody who is a little bit newer to our platform, I do want to highlight, I know that points are important. We do advance commissions, so very similar to what you're used to with your direct carriers, we build down an advancing platform. As long as we have the applications in, submitted in good order, we can follow that same 40-60 advancement split, or it'll be pay out 100% upon placement. So it's either we qualify for the advance commissions. If we don't necessarily care about that so much, it will still pay out 100% upon placement. Adamola and I know we've had some discussions here, but anybody who's running business in New York, I think we all know that New York is kind of a different world when we talk about the life insurance industry. And I want to make sure that you all understand we have your back if you are running into some of those situations. With the additional regulations, the additional steps that are needed, we put together a guide so we have the information for you to get the required product training and to get everything that you need set up to write business in New York. We've been, albeit slowly, but expanding our life insurance platform in New York. We recently got National Life Group added. So although we do have a slimmed down platform, you can see we have some very large names, some very reputable companies here. And with National Life being added to that group, now we have some living benefit options in New York as well. So slowly but surely, we're expanding and trying to make business a little bit more fluid in the state of New York. So I'm going to run through a lot tonight. I'm going to very quickly go through some of our resources online. I want you to be familiar with some of the digital resources, the tools you have access to on our website. Next up, I want to go through underwriting a little bit, how Crump can help support you from an underwriting standpoint. And then we'll wrap up tonight talking about a few of our carrier partners and some of the unique products we have available. So starting with the digital solutions, I can tell you anyone who has been working with Crump for a while knows that we've recently made some pretty significant adjustments as far as our website. We introduced a mobile app, so there's been a lot of changes here, and truthfully, it was well overdue. So I'm still seeing some improvements on that end where we're constantly making changes here. But what I really want to highlight is our mobile app. This was a very necessary update. I will leave this on the screen for just a minute for anyone who doesn't have it, so you can scan the QR codes if needed. But this is important because we understand that you are out meeting with clients, you're in and out of meetings. You don't always have the time to sit down at your computer, to call your Crump case manager, to follow up on your cases. So introducing this app was very important to us because we want to make this more accessible for you. Through the Crump app, if anyone's familiar with our website, it is basically the same thing. So you can run quotes, you can follow up on your cases, you can even submit if you have documents that you need to upload for a certain piece of business, you can upload it directly through this app. But there are a lot of resources out here to help you manage your business while you're on the go, while you're meeting with clients, and truthfully, just to make your life a little bit easier. Now, some of the number one resource, in my opinion, are the push notifications. So when you get a case moved to approval, when it issues, when there are updated requirements, whatever it is, you can get that message sent right to your phone. You can go right into that case. You can see what's going on. We can get that done and get that case placed sooner rather than later, which I think we would all agree is what we want to do for our
I
clients at
don't
the end
love
of the
you no
day.
more.
So this makes that process a little bit
Can you
easier. You're
make
not
me
going to have to
tea?
wait until you can sit down and check your emails or call that Crump case
I have to
manager. You can
graduate.
get that update sent right to your phone. You can pull up the Crump app and you can go right into whatever it is that we need to do as far as the next steps. You have the availability to quote. So similar to the tools we have on our website, you can access all of them on the mobile app as well. So if you are the individual that you like to run your own quotes, you have the ability to do that.
My trust
We
is in
talked
the
about the
system.
updated case status. If we have documents, you can upload them through here. And one tool I want to highlight is the coverage calculator, because I think this is important, but honestly, an overlooked tool
Toss it
that's
up.
available on our website and our mobile app. So this life coverage calculator is something I
What?
see as a good icebreaker when we're sitting down with brand new clients.
Oh,
It's nothing overly
insurance.
complicated, but it's a basic life
You had
insurance
more
needs
chicken?
calculation tool. So it's going to ask some very simple details. What do we expect for final expenses?
Can I have coffee and
What
tea?
are we looking at as far as outstanding debt? Do we have a mortgage? Do we have children that we plan on sending to school? And we can estimate, cost of education there. Then it's going to ask some basic details about household income. And then lastly, it's going to ask about any kind of savings, investments, current life insurance. And ultimately, what it's going to do is give us that starting point based on these answers to these questions. Here's about how much life insurance coverage we need to start with to support your family if something were to happen to you tomorrow. That's a powerful message to lead into. From there, we can build with all of the knowledge, with all of the carriers, the products, all of the access we have. We can build on that. We can talk about products with living benefits. We can talk about cash value. We can talk about protection focused products, whatever fits that client's goal. This is simply the starting point. So I highlight this because I think it's kind of buried here in the site, but I do think it's a useful tool when we're sitting down with clients that first time to help them understand why we're going to start at about 500 to 550,000 of life insurance. We're not just making these numbers up. There is some science behind it, albeit loose. but we want to help set that expectation for the client. Here's where we're going to start, and from here we're going to build to make sure that you have that financial security that you and your family ultimately need. So as far as quoting tools, through Crump, you have access to a very large sales support desk. So you can always give us a call, give us the details about your client. And what we're going to do is go through and run quotes with all of our carriers and show you our top few options. But for those of you that like to run your own quotes or you have a very high need, like volume, as far as illustrations, we have the tools for you to be able to do this on your website as well. First of all, our vital quote comparison tool, very, very simple to use. As far as running quick term comparisons, we can spreadsheet and run every Crump term carrier all in a matter of 2 or 3 minutes. And again, I think that's a powerful message to be able to sit there with clients and show them, hey, I'm not just looking at one or two options. I really am exploring as much of the industry as I can to find the most competitive product for you. If for anybody who wants to run permanent illustrations, we have another program called Self-Service Illustrations. And by the way, this is a screenshot right from our homepage. So you can find all of these on the Crump homepage that you all have access to
Yeah,
already
awesome.
as you're set up and licensed with
For
World
this girl,
Financial Group.
please.
But with the self-service illustration tools for running permanent quotes, that does come with some rules of engagement. So you get 6 months access to the software your first time in. From that point on, it will depend on placed business. So every case you place through Crump, you get another 3 months access to this self-service system, and that's simply because it's a third-party program that we pay for. So nothing too crazy there. But if you do want to run your own permanent quotes, you have the ability to do it. The illustration request button, this was a big upgrade for us because, again, I understand you guys are on the road quite a bit. You're not always sitting in front of your computer, and you can't always sit down and call Crump during business hours to talk to somebody live to give us your client information. You can actually submit all of that online through the app or on the website now, so it gets set up for our sales support team. And when they come in that next business day, they'll have the tools there to get started, and they can get those quotes running out to you as soon as possible. The last program I want to talk about here is our quote and transact. This is mainly for uh, those clients that we're ready to close on. And honestly, I use it more for term insurance. So we can actually go from the coverage calculator to quoting to the e-app all in one program. So I see this as that closing program. When we've already sat down, we reviewed quotes, and we know that client's ready to move forward, we can sit down and do that final comparison, nail down exactly how we want to design it, the coverage amount, the premiums, whatever it may be. We can run those updated quotes and then go right into the e-app all in one system. So I like this quote and transact program when we're ready to close. Um, Obviously, that comes after we run those initial quotes. Now, when it comes to doing business with any of the Crump carriers, you do need to get appointed with each carrier individually, but you don't need to worry about getting pre-appointed. Most carriers through Crump follow what's called just-in-time appointment processing, meaning they're not going to process your appointment until you submit your first application. So essentially, you can do it at the same time, but everything can be done digitally through the Crump website. And we want to leverage this platform as much as possible because I think we all understand it. It makes life easier, it eliminates errors, and it's just ultimately quicker. But when it comes to getting appointed through the Crump website, we have a program called Get Contracted. This will redirect you towards a website called SureLC that many of you have probably used in the past. If you've used SureLC, you'll have that information already created. You'll have that profile set up. You'll be able to simply pull that over and tie it to your Crump profile. If it is your first time, what you're going to want to do is go through SureLC, set up your licensing and contracting profile so all of your information is done and saved in the system. And then when you are ready to move forward with a new carrier through Crump, you'll be able to go back out through SureLC, submit that appointment, and continue on with that business with the application, which leads us right into the e-app. Also available on the homepage, we have e-apps for all of our carriers, all of our products. I don't think I need to explain why we want to leverage these applications as much as we can, but just to highlight for accelerated underwriting, the non-med programs for clients who are healthy, we absolutely want to go through these abbreviated e-apps because we can get clients coverage quickly and get them covered with very limited underwriting. So we want to lean on the digital resources as much as we can here. Now, to get into the Crump platform, this is where I'll be very honest with everybody on the call. I tend to get into the weeds a little bit. I consider myself kind of a product nerd. It's what I like to do. I like to compare these products. I like to find the right financial solutions for the right clients. So I don't want it to be overwhelming when you look at our platform. You'll see here on the screen a lot of big names: John Hancock, Prudential, Mutual of Omaha. We even have the Gerber baby for final expenses. A lot of big name companies. I don't want you to get lost in trying to navigate and figure out, of all these carriers, who do I go to for this and that? And that will come with time when working through Crump. But you have individuals like myself, like our sales support team. We're those product experts in your back pocket. I want you to be able to focus on building your business, on meeting your clients' needs and expectations, and less on reading through product guides and underwriting manuals and running 10, 15 different IUL products side by side. That's what we can do for you. So we can take a lot of that legwork off of your plate. We will scour as much of this industry as we can to find you the most competitive products for your client's situation. And another thing I will tell you, of these carriers on the screen, not everyone's going to be competitive in every situation. Some carriers are going to fit certain client goals better, whether it's cash value, if it's simply affordability, if they want living benefits, whatever it is. These carriers each kind of have their niche markets, and our team can help you find those for the right clients. So please don't be overwhelmed when you look at our platform. We have a lot of carriers and a lot of products, but you have people like me here who, honestly, it's my job to help you find the right solution with all of these opportunities. As far as variable life insurance, I want to highlight we do have two carriers we can sell variable through, Prudential and John Hancock. Both of them very competitive in their own right. Prudential recently released a new product called their FlexGuard IVUL. It's very interesting. It seems pretty competitive. They recently just raised caps on it, but it's very similar to their RILA product for anybody who may be familiar. They have some buffered strategies as well as your traditional sub account options with the index variable products. A really unique product in the marketplace. Um, Very competitive from what I've seen, putting it side by side between VULs and IULs. So if we are securities licensed, you have an opportunity for variable, we can help you there as well. And then finally, long-term care, the linked hybrid long-term care and disability solutions. I have counterparts that they are the experts in this arena. Many of you have probably met or heard of Susan Weiland from the long-term care team. She is the expert there, but we've really seen a lot of growth with carriers such as One America, Securian, and John Hancock in the hybrid LTC space. Specifically, One America is going to be there out in Vegas. So anybody who's going to be there, please stop by and say hi to them too. They are excellent partners with not only us, but with World Financial Group. So talking about underwriting, I want to start with how can we help your healthy clients? The clients that we all know are going to be easy. I want to make sure everybody's aware that just about every carrier out there has some form of accelerated or intelligent underwriting platform. And these are really designed for those clients who are healthy, they see a doctor regularly. The clients that we know can go through underwriting and get maybe a preferred or better rating. We want to leverage these programs because we can get the clients through not only quicker, but get them through without having to take full labs. I think we would all agree we don't want to have to go give blood and urine if we don't really have to. And there are a lot of clients that truthfully, if we went through the right application process, not only would they have not had to do that, they would have gotten their policy in force a little bit sooner. So we do have those healthy clients. These carriers are constantly expanding in this arena. I don't think that's going to change. I've seen carriers go from 500,000 up to 3 million with these programs in just a few years. So it's changing very quickly in our industry, and we want to keep an eye on it. We want to leverage these resources and these opportunities as they come. Now, the reality of it is that's not our average client. We're not always dealing with the preferred and the preferred plus clients, and we need to know how to handle that. This is an area where I think Crump brings a ton of value to your business. With all of those carriers that I showed on the screen earlier, what that means is we have a lot of different opportunities. Some carriers are going to be a little bit better in an underwriting situation than others. Like I can tell you simply from experience, we have carriers like Prudential and John Hancock that are traditionally pretty aggressive with difficult cases, really good with diabetics, which is something I see a lot. So the more we know about your clients, the easier it is for us to kind of point you in the right direction and try and focus on the carriers that are going to be better for those clients that we know might be difficult coming into it. Now, we also understand that we're not all underwriters. I've been in this industry for 13 years. I am not an underwriter. I don't know what question to ask. I'm certainly not a physician. So our underwriting team has put together these fact finders or pre-underwriting questionnaires for pretty much anything that you're going to run across on a daily basis. And what I want you to think about when you have a client that comes to you and says they have some health issues, hey, I should get a Crump questionnaire filled out, send it in, and see what their underwriters have to say. These are fillable PDFs. You don't need to print this out. It doesn't need to be signed. This isn't going into any kind of database anywhere. This is nothing more than a sheet to help you ask the right questions so we can put that information in front of the underwriter and they can give us some feedback on what carriers we might want to focus on. I really can't express how much these have saved us in the past. Sometimes we're going to get those answers, unfortunately not, but you will find underwriting can do us a lot of good when we get them all the details and we can try and focus on that Prudential or that John Hancock or that unique carrier that happens to fit that client's unique situation. So these are all available out on the website. I know this says 75. I think last I checked, we have 84 questionnaires, so it's very rare that I run into a condition we don't have a fact finder for. We want to lean on these as much as possible. So if you do have those clients, please get the questionnaire filled out, send it into our sales team, and we can review it with you. Unfortunately, we do run into some of those cases where we just can't get through underwriting. We do have a guaranteed issue final expense plan available through Gerber. This is for clients between the ages of 50 and 80 for a maximum of $25,000. So no underwriting. This is what I call my back pocket or kind of my last resort option for those clients where we've explored as much as we can. Maybe they've been declined. Maybe we did the questionnaire and the underwriter said no, unfortunately not. We know that we have Gerber to fall back on. So it's not going to be, the most attractive premium case. I'm never leading into a sale like this, but this really is a nice fallback plan when we run into those difficult situations and the clients just need some final expense coverage. We can get them something. Now, this policy does come with a 2-year graded period. So for the first 2 years of the policy, if the clients were to pass by non-accidental causes, the beneficiaries would receive the premiums back plus 10% interest. So first 2 years, return a premium with a little bit of interest. After that, it's the full death benefit, again, fully guaranteed issue. Now, to get into some of the products tonight, I showed you that screen at the beginning. We have a lot of carriers. We have a lot of products. And honestly, it's hard for me sometimes to just pick one or two to talk about, so I picked 3. Tonight, I want to talk to you about 3 carriers, John Hancock, National Life, and Allianz. And I'm going to talk to you about these 3 because of the unique opportunities that they offer for us, starting with John Hancock. Now, I'm not going to go too far down into the product specifics, but I want you to see John Hancock's platform at a high level, and I want you to understand what they bring to the table that separates them from some of the other carriers in the industry. But from a product standpoint, they have a little bit of everything for us with the fixed, and they're one of our variable universal life carriers. They have 2 different IULs, very uniquely named, the accumulation and the protection IUL. I think we can kind of gauge what the purpose there is. They have individual, just universal life, more for protection purposes, second to die insurance for survivorship, estate planning cases, and then term insurance. Now, John Hancock, they're one of, I think, 2 or 3 carriers in our platform that has a traditional long-term care rider. If we don't want the long-term care and we like a chronic illness rider instead, they actually give you the choice in most states. I'll put an asterisk there. There are a couple state exceptions. But in most states, they allow you to choose between either the upfront charge chronic illness benefit or the discounted chronic illness. So they really give us 3 different types of living benefit packages to choose from. And we can add a critical illness rider as a separate feature if we want. So a lot of living benefit choices here. From an underwriting perspective, in general, John Hancock has always been very strong. I know diabetics, that's one area where they're very strong, but alternative tobacco users, they are extremely unique. So clients using chewing tobacco, nicotine gum, the patches, as long as they're not smoking, using nicotine, smoking cigarettes, they can get non-tobacco rates, which is big. Most carriers, if you have any of that, you're getting tobacco ratings. The occasional cigar usage, we can have a cigar a month and still get their best class. We can have maybe 2 per month and still get standard or preferred non-tobacco. So they're very lenient on the occasional cigar usage and the alternative tobacco. But the most unique program they offer is this quit smoking incentive program. So this is only on the permanent contracts. They will give clients that qualify for at least standard or preferred rates non-smoker charges for the first 3 years of the policy, even if they're currently smoking. They're a regular smoker. Within that 3-year period, the client needs to fully quit. If they fully quit, they retest. they prove, show the carrier they've quit, John Hancock will let them keep those non-tobacco charges for the rest of their life. Now, it's truly an incentive because if by the end of that 3-year period I don't quit, I don't take that test and prove it, my charges are going to go up the tobacco ratings. So it is truly an incentive, but this is an opportunity for those clients that unfortunately I run into more than I want. They maybe are just starting planning now and they decided, hey, I quit smoking 4 or 5 months ago. Most carriers are going to say, okay, until you're at least 12 months, we're not considering non-tobacco rates. John Hancock, we can get them locked into life insurance now. And the second, I guess, secondary benefit of this is it is a true incentive to stick to quitting. I don't think anybody's going to pick up smoking again if they realize their life insurance premiums are going to double. So I do think it's a unique opportunity for those clients who had recently quit or clients who are even technically still smoking. They can qualify for non-tobacco charges. But the program I really want to highlight tonight with John Hancock is what's known as their Vitality and Aspire platform. So the Vitality program, this isn't a product. I consider it it's a healthy engagement program. So it's included on all of the John Hancock products. There is a free version, but for $2 a month, we can add on what's called Vitality Plus. This is a healthy engagement program that we can participate in every year. And by participating in this program, by doing healthy things, by seeing a doctor regularly, by going for a walk every day, wearing a Fitbit, just being in good health, we earn points every year. These points accumulate to qualify for one of these status levels. Bronze is basically we put that rider on and it costs about $2 a month to have this program added. Silver, gold, and platinum. Based on our engagement in the program this year, we're going to qualify for one of these levels. The following year, we're going to receive what's called vitality credits on our policy, lowering our cost of insurance. So they're giving the client the ability to kind of take over their life insurance policy a little bit by doing things that they either are already doing or should be doing to manage their health. They'll let them lower the cost of their first
Recording in
90 days, we
progress.
get another 250. If our BMI, cholesterol, blood pressure, if all of those kind of readings are in good order, we get points for that. We get points for just being a non-tobacco user. So just with a few of these things here, we can easily get to that silver or gold status already, and we haven't taken a step out of the house for the most part. Now, I talked about, there's a free version of this rider called Vitality Go where you can still earn some like monetary discounts on like fitness gear, certain savings at stores, but this Vitality Plus is where we see the savings on the life insurance and we have some monetary benefits as well. So again, Vitality Plus, this is where we can lower that cost of insurance by participating. We do get a Fitbit for free. Or if we want, we can upgrade to an Apple Watch for a discount. With that Fitbit, we can register for this Vitality platform through our mobile device, through online, through our computer, whatever it is. So we can constantly have that information uploading. We can set it up, and there's even like online webinars, online screenings we can take to earn points for this program too. There are even discounts, travel discounts. Our previous wholesaler, Seth, I use him as an example. He's a very healthy guy, but he's had one of these plans for a while. He was able to get a free hotel room for his family a couple years ago, just going on a vacation, simply by being in good health and participating in the program. So there are a lot of benefits to this. And again, this is a program, not a product. So I keep saying that. So I want to show you two completely different clients and how they were able to achieve gold through this program. Starting with Anna. Anna's 30 years old. Anna is very healthy. Anna didn't record a single step, a single workout, anything outrageous, and she was able to hit gold status. So we can see here by getting her annual Vitality Health Review, 500 points. She got another 500 for doing it her first time. Now, Anna is 30 years old and in great health. So she hit that top notch for the BMI, the glucose, cholesterol, blood pressure. She's a non-smoker. You can see how those points add up very quickly for someone like her. Now, she did not record. She put her Fitbit on the desk and never pulled it out of the box. Didn't record anything. Meditation. We got some points for meditating for a couple minutes, on a daily basis. Different follow-ups, treatments, and this will adjust based on the client's age. Like a 30-year-old and a 50-year-old might have two different criteria to meet. But for getting a dental screening, a mammogram screening, we get points for that. And then the online webinars, she did a couple nutrition webinars and then these mental well-being reviews. So there's a lot of ways that clients can participate in this program to earn points. She was able to hit gold and see that reduction on her COIs the next year. Now, Susan, completely different client, 50 years old. Susan's not in just as naturally good a health. I think we know there's a big difference between 30 and 50. But she was able to participate in this program and also qualify for gold status, but in a very different way. So she did her health review. She did it within the first 90 days. Now, during her vitality checkup, her general measurements, her blood pressure, cholesterol, BMI, it was not as good as Anna. She did not get near the points for that. But she set regular goals for herself that she checked in on. She participated with that physical activity. So wearing that Fitbit and going for a walk, getting the steps in every day, she was able to earn a lot of points doing that. They even have some of these Vitality health foods. So they have certain brands, certain healthy foods we can earn points for. Her annual flu shot, mammogram screening, dental screening, we earn points for that. And then Susan hit the online education a little bit harder to get her up to that gold status. So we have a lot of opportunity for a lot of clients to participate in this program. And again, none of what I said had anything to do with their current health. It's about taking the steps to participate in this. Now, where I think this gets more important, John Hancock in general has always been strong with underwriting, and they've been really good with diabetics. They expanded this Vitality program to include criteria for clients with type 1 and type 2 diabetes. And I think this is extremely important because even my best case type 2 diabetic client, oftentimes I'm looking at like table 2, substandard ratings, which we know is the best case is still a pretty heavy premium. This is a way for those clients to help offset that higher cost that we know they're going to incur. So somebody with diabetes who's managing it, they're doing the things that would earn them points in this program already. I think this is an excellent opportunity for clients with diabetes to help offset those higher costs, and including programs for clients with type 1, which gets even more costly with a heavier rating in most cases, just kind of adds to this. So overall, I want to present this as a lifestyle, not really a life insurance product that John Hancock's trying to promote, and they're going to reward you by letting you take over and lower the cost within your life policy. Again, not about being in that top health. I see this as being even more important for those clients who maybe are that standard
Come
or
home hungry
substandard
and then
rating,
everything
so
affects
they
us.
can take the steps to not only better their health, but also mitigate that higher cost of insurance. So yeah, John Hancock with Vitality. I want you to remember diabetics. I want you to remember the Healthy Lifestyle Program, and that they do have a little bit of everything for us from a product offering standpoint. Now, moving on to the next carrier tonight, National Life Group. Again, I'm not going to go too deep into all of their products, but I want to talk about some of the unique features and what they bring to the table here. But I do want to highlight from a product standpoint, they are one of two carriers Crump offers that has term with living benefits. And I will talk about their living benefits a little bit more here in just a minute. They have actually 3 different IULs. I haven't updated this yet. Their newest product, called the Rapid Protect, is an instant issue IUL with living benefits. So that's very new. They have a whole life, and then they have an index survivorship contract. Again, living benefits across the board. Now, the living benefit package is what I think really sets National Life aside. Overall, I think their products, their pricing, the features they offer are built well to service the middle market. And truthfully, I think as an organization, you guys do that very well, more so than most organizations in this industry. So I think National Life is a natural fit for a lot of the business that we're seeing. They have the very robust living benefit package. They have chronic, critical, and terminal illness, again, on term insurance as well as permanent. They also include critical injury. So some more severe but unique situations like traumatic brain injury, severe burns, coma. We can accelerate a lump sum to help offset those expenses. There's an Alzheimer's benefit. If a client is diagnosed with Alzheimer's, they can accelerate a lump sum to help prepare for and offset those expenses. So they have a couple extra facets that we don't typically see built into their living benefit platform. If we do have clients that are focused on that higher end cash value type design index universal life product, they have a separate product called their Summit Life IUL. Starts at $1 million of life insurance coverage, and it's really designed for those larger cash value kind of sales. They even have the account value enhancement rider, which waives early surrender charges, giving us some liquidity. So when we look at clients, I get some of those clients. They are looking at this as a heavy, kind of tool to manage their or use to help manage their money. Um, Having access to that money early on is sometimes important. The lifetime income benefit rider, probably one of the most unique riders that I've seen with any living benefit package here. And it's a little bit different than what we think of when we hear the term living benefit. Usually our mind goes to chronic illness, critical illness, terminal illness, that kind of stuff. The lifetime income benefit rider is a rider that's available on their IUL products. We can access this rider between the ages of 60 and 85 when we're ready to take income from our life insurance policy. And what's going to happen when we exercise this lifetime income benefit rider? Premiums are going to stop. If the death benefit was increasing, it's going to stop. National Life is going to take our total policy value, they're going to spread that out and distribute it out to us in the form of fixed loans as guaranteed income for the rest of our lifetime. So essentially, what they're doing is annuitizing our life policy for us. And I consider this a living benefit because it does not cost, it's automatically included on the IUL. And I can tell you, we've written a lot of National Life the past few years. I'd be willing to bet most clients don't know about this feature on their policy. But I see it as a living benefit because I see it as a service to the client. We're illustrating these IULs projecting values 10, 20, 30 years from now. Now, we all understand there's a lot of assumptions being made, but when we're projecting the client taking income 30 years from now, that doesn't just happen. That's assuming not only do we have performance and growth and everything else, it's assuming we're sitting down and reviewing our policy. We're sometimes still paying premiums. We need to initiate that income from the policy every year. We need to sit down and review this with our advisor. There's a lot that takes place. Many clients don't necessarily want to do that. A bigger reality of it is I might not be here to be their advisor 30 years from now. I might be in a different part of the industry. I might be retired. I might be in a different side of the planet. I don't know. And I want to give clients the peace of mind that they're not going to be left out navigating those waters on their own. When they get into those retirement years, maybe they don't have as high of a need for life insurance. They want to leverage this policy to have that guaranteed stream of income. They can flip this rider on. National Life's going to take a lot of that process off of the client's plate, and they're going to know they have that income they cannot outlive. So even if we do live, a very, very long, very healthy life, these illustrations these days show out to 120 years old. We could be taking income to 120 years old, and we'll be left with a minimum death benefit of $15,000, so enough for final expenses. So this is really designed, and I look at this for clients who are in that 35 to 55 or 60 range, that when they're in their income earning years, maybe they have children, they have dependents, they have a mortgage, they're getting insurance now because they need insurance. They need to support their family if something happens. But when they get into retirement, the kids are going to be out of the
No, you
house,
want
the
me to take
mortgage
as
is going to be
well?
paid off. They want to focus on their life, and maybe they want to spend more time with the grandkids, they want to travel.
In the room?
They don't want to have to worry about managing their life policy. They don't need as much insurance anymore. They can turn this on, let National Life distribute that out for them. So I see it as an extension of their living benefit platform, even though it's not what we usually think of. Um, but ultimately, we don't pay for it. It's automatically included on these products. So I want to talk about it. I want to shed some light on it because I do think it's a strength of National Life. With that lifetime income benefit rider, we can design it with a level or an increasing payout option. So if we have clients who either don't have as much of a need for income right now, or they're thinking about maybe trying to offset inflation in the future, we can set it up so it increases the income by about 3% annually out through the life of the policy. So we have a little bit of flexibility there, and we have the ability to turn the rider off. So I use the example of I hit 60, I retire, and I turn this on right away because I want my money and I want to go do what I want to do. And then maybe a new grandkid comes along a few years later unexpectedly. That might change what we want to do with our life policy. Maybe we decide we want to leave some more death benefit. We can turn this rider off and pick up that life policy at wherever that value's at that time. So we're not locked in forever once we turn this on. We have a little bit of flexibility with how we design it. And like I said, there's no cost to have this on the contract. So, unique take on the living benefit platform. The last rider I'll mention here because it's on every product. I don't think anybody ever sees it or asks about it, but I do think it's kind of interesting. Is their charitable matching gift death benefit rider? If we do have clients who are maybe heavily involved with a charitable organization, a church, whatever it may be, yes, a lot of those clients they like the idea of leaving a portion of their death benefit to those organizations. National Life will match up to, I believe, 2% of the death benefit up to a maximum of 30,000 to that same charity or organization. So if you do have those clients, they like the idea, they're a little philanthropic. We can talk about this rider on there. We don't even have to add it as just an added benefit to what they'll do. So as far as other unique areas with National Life, I talked about the living benefit platform. They're the only carrier that I know of that will offer living benefits on juvenile policies. I get a lot of calls about juvenile IULs. So we can write juvenile IULs. They're lenient on the financial underwriting, which is also important to understand. Typically, with juveniles, carriers want to see at least double the coverage on the parents as to what we're applying for on the children. Meaning, if we're applying for 200,000, they need 400,000 or 500,000. National Life will go up to 500,000 without the parents having sufficient coverage. Not that this is something I see every day, but I have run into those situations where there's only one parent in the picture and they're uninsurable, or both parents are uninsurable, and that really limits us on what we could typically do for that child. Even though they believe in life insurance, they want to start that planning early. National Life now opens that door for us, and we have living benefits. So when I say I think they meet the middle market well, this living benefit platform I think covers a lot of those unknowns that your average client, people like me, I'm not a high-end advisor, um, but like they have the features that people like me are going to be interested in to protect me if something unexpected happens, to protect my family, and then again, I get into those retirement years. I know that I have the flexibility to leverage that policy and help supplement my retirement. So I show this screen. I know I already talked about the accelerated underwriting platforms. National Life also has one. Up to age 50, they'll go up to 3 million. Up to age 60, up to a million, and even up to 65, we can still get up to 250,000 without having to take full labs. So clients who are healthy, they see a doctor. We know that there's not going to be a lot of issues. We want to lean on these programs as much as we can to make life a little bit easier. For national business, two carriers in my platform that really excel. National Life is one of them, Prudential being the other. Very lenient with the foreign national clients because they focus a lot on residency. So they're not necessarily looking at the type of visa or anything like that. They're looking at the connection to the US. If we have a client who's been living here for years, they have a tax ID number, um, maybe they're waiting to get their green card, that can sometimes take a long time. We can still get them covered. We don't need to wait with either National Life or Prudential. We still qualify for that accelerated underwriting. And I showed these consumer resources on the screen, not necessarily for you to scan and go look through right now, but of all the carriers I work with, they have the most as far as marketing materials in other languages. I want to say they have maybe 6 or 7 different languages for us out there. So they have the marketing to help us support those markets. They're very, very lenient on the underwriting side, and they're excellent partners if we are running into the foreign national world. So I know we are getting to close to time here tonight, but I do have one more carrier I want to throw at you, and that is Allianz. So I talked about John Hancock and their healthy lifestyle rider. That covers just about any client we could ever talk to. I talk about National Life and their living benefit rider. Same thing. We can find those products that fit any client out there. They cover a broad section of the market. Allianz is not that. Allianz has one product, and it's very much an accumulation focused IUL. So I can tell you right from the beginning, if you come to me with a potential client and tell me a little bit about their goals, whether or not Allianz is going to be in play. This product works very well for those clients that are looking to overfund, they're looking at cash growth. and they're looking at income potential. This isn't the product I look at for clients who want just simple death benefit. They want living benefits. I have those other carriers I talked about. But for those income-driven designs, Allianz has been one of our top products here for quite a while. So aside from just generally being pretty competitive, I want to highlight their index lock feature. This is probably the most unique feature I've seen on any IUL when we talk about crediting. I know there's a lot of words on the screen. I don't want you to get lost in that. I want you to pay attention to the chart here in the middle. But Allianz offers 3 crediting strategies on their IUL that allow us to lock in their crediting rate at any point throughout the policy year. Anyone who's been writing annuities with Allianz is probably familiar with this feature. This is something they initially introduced on their annuity products that they eventually brought over to life. But what this means is when we hit a high point in the market, or we hit a point that we're comfortable with throughout a policy year, we can lock that in and mitigate risk for the rest of the year. So lock in a rate of return that we're comfortable with, and we can do that once per year. Now, this isn't going to be for every client. This isn't going to be for what I call those set it and forget it clients that just want death benefit and life insurance. This really is going to be aimed at those clients who are maybe a little bit more financially savvy, but a little bit more involved in their financial planning, with the goal being to maximize growth potential. So if you look at this chart here, it gives you a very simplified example of how this might work. Let's assume we write this policy on January 1st. Like with any IUL, our crediting period will end a year from there, so December 31st, and we're credited the difference between caps, floors, participation rates over that 1 year period. Now, with Allianz, at any point throughout that year, I can log into their website, I can pull up my client's policy, and I can see where their returns are currently at. If I'm comfortable with those returns at that point in time, I can lock in that rate of return. It'll lock in at the close of the markets that day, and that will be the crediting rate applied to my policy for that given year. So we can essentially pull on a lever when we're in a positive market environment to lock in a rate of return that we're comfortable with. So this example here, let's assume we write this in January, and roughly 3/4 of the way through the year, we sit down with our client, we review it, and whatever this percent return is, we're comfortable with this 108 mark, so we decide to lock that in. Now, the last quarter of the year, our allocation actually took a bit of a dip. But because we locked that in at this 108 mark, at the end of the year, that's what we're credited on, that rate that we locked in. So we were able to protect ourselves from this bit of downfall. Now, one of the questions I get, how does this work on a monthly basis? It doesn't. They only credit on an annual basis, which is why they can offer this feature. So I want to get ahead of that question because I get that a lot. So regardless of if we lock this in back here in the second month of the year, or we lock this in the 11th month of the policy year, this is going to be our crediting rate for that given year. Now, going into year 2, what we see here in orange, our allocation is based off of where it actually finished in the market, not where we locked it in. So if I do by chance have a year where I lock in a rate of 15, 20%, which I have seen some of those, I don't have to exceed that the following year just to see growth. It will be based off of where that allocation actually finishes. But here in the orange, it shows you a little bit of the risk associated with this. So similar scenario. 3/4 of the way through the year, I sit down with my client, I review my policy, and we're comfortable with that 108 mark. So we locked this in. Now, that last quarter, it kept growing a little bit, and we did miss out on some of this upside. So I would argue we were still able to lock in a rate of return that we were comfortable with that helps meet our goals. But we did pull that trigger a little bit early. So we locked it in just a couple months too early and missed out on some of that growth. Now, everything we just did, we didn't have to lock that in. We could let this run throughout the year. We don't have to do this at any time. But Allianz came back and actually added a couple extra features to this. So we can set an automatic or a target lock. So at the beginning of the year, we can go through our policy on the Allianz website and set an automatic lock of, let's say, 15%. If that allocation reaches that lock value at any point in time, it'll automatically lock that in for us. So it gives us as the advisors a reason to stay in front of those clients. We should be doing at least an annual policy review with this feature, in my opinion, just to make sure everything's on track and that we are taking advantage of this. We have the ability to set lower target locks as well. So I use the example of, halfway through the year, I review my policy and maybe my returns are at 6 or 7%. I might not want to lock that in right now because I think it could go higher, but I also don't want to lose out if the market were to tank this year. You can set a lower target lock of, let's say, 1 or 2%. So if it does take that sharp dip, it'll lock in there. So we essentially raise the floor for that given year. So there are a lot of ways that we can use this. We don't ever have to use this lock feature with Allianz. We can treat this like any other IUL with the 1-year crediting period, but we have this ability to step in a positive market environment and lock in a rate of return that we are ultimately comfortable with. So a little bit more complex than what we're going to show to our average client, but for those clients who are focused on cash growth, maybe a little bit more savvy, they're going to see the value in this feature. The last thing I'll say here about Allianz, the loan rates, this is because it's a cash value focused product. I think this is important to understand. They do have your traditional fixed loans. So if we take a fixed loan within the first 10 years, it's going to cost us a little bit, almost 1%. But then starting year 11 is where we see that wash loan, where they're going to charge 1.96 and credit the same 2% back. So we actually gain a little bit. The index loans are what I like because they guarantee a 5% loan charge. So if we do want that more aggressive loan, we don't have to worry about that charge going up to 6 or 7% later on. We know it's going to be guaranteed 5%. And what I can tell you is right now their fixed accounts at 5.3%. Fixed accounts are a way for me to, it's how I look at company strength a lot of the time with these products. The fact that their fixed accounts higher than their index loan charge, that's a win in my book. So I want to stop there. I want to open it up to questions. I know I threw a lot of information at you here tonight, but if I leave you with nothing else, I want you to have the contact information on the screen here, the 888 number. So this is the loop number where you can get through to any of the Crump WFG dedicated teammates, the different departments. Same thing with this, the TFN Life Illustrations email address. This is for our sales support team. And then you do have my information over here, and I will put, I think I accidentally deleted my phone number off here. I'll put it in the chat. But yeah, I do want to open it up to any questions.
All right. Before we ask some questions, I just wanted to give it up for Mr. Brian Schanick for putting up that wonderful presentation. Wow, that was loaded, loaded, loaded. We are fully equipped. I know, like he said, it's a lot of information, but that's why we have him as a resource, to go to. So please, if you have any questions, just raise your digital hand and we'll take those questions one at a time. And I'll facilitate that. So let's have SMD Helen.
Thank you so much, Ademola. Thank you so much, Brian. And to appreciate this information because I think it was timely to me. I'm grateful that you showed up today because I just want to give a testimony about what you just spoke about because I had a client who was declined because he has diabetes, coronary artery disease, and he has myocardial infarction. And when I went to Crump and asked for a quotation, they sent me the questionnaire, which was very helpful. The client completed the questionnaire, and I got 3 quotations termed with living benefits the same day. Actually, it was within 1 hour. All the quotations were sent to me. Thank you so much for what you do.
I'm glad to hear, and that is the strength of working with so many carrier partners. If one can't do it, we will go down the line.